I'm Matt Bouchard here in New York City for NAREIT's REIT Week 2018 Investor Conference. Joining me today is Ernest Rady, Chairman, President, and CEO of American Assets Trust. Ernest, thanks so much for joining us today.
It's an honor to be here. Thank you for having me.
Now, first quarter office leasing numbers showed a 12% uptick in rent. What's driving that trend?
Fortunately, our office properties are in markets. Several of them are in markets that are very buoyant. And the leases that we're signed that are expiring were signed a number of years ago. The economy has continued to prosper, and particularly Seattle has a very strong leasing market, as does San Francisco. San Diego does, but probably not to the same extent.
And what's the latest news on renovation and lease-up activity at the Kmart building in the Waikele Center in Hawaii?
Well, we're very close, we think, to a lease with a major grocer. And the Kmart building, and that would be for a space that across the way that was abandoned by or left by a sporting goods company. And the Kmart building, we have a number of interested tenants, but until that grocer is finalized, we haven't decided on which of the other tenants would make the best mix. In addition to that, we've had some other interests, so it's an ongoing saga. The trouble with the Kmart building is that unless we tear it down and rebuild it, there's no access for other tenants to bring their goods in in the back way, in the back door, because there's no back door, because the Kmart buildings goes right up against a road and an embankment. So it's an ongoing saga. But like I tell folks, it's 43 acres, fee simple, half a mile of frontage on the H1, which is the main freeway in Honolulu, so it'll be good. I just don't know how good or when.
Now, as you look across your portfolio and the market conditions, is now a good time to look for acquisitions, or is it a better time to focus on internal growth opportunities?
We focus, we keep our eye on the market because there may be an opportunity. We've found very few because we have to buy something of the same quality we have in order not to dilute the quality of the portfolio. Those properties don't seem to come on the market. And if they do, they're at a price that is, that I'd have to apologize for to our shareholders if we bought them. So we focus on what we have and try to improve it. So that's our strategy at present. Although I keep an eye on the marketplace. We have one property in San Antonio, which is 60 acres, 600,000 square feet, infill shopping center, but it's sort of out of our coastal West Coast strategy. And if I found something equally compelling on the West Coast, we would trade that for something on the West Coast. But I've been looking for 10 years, so either I'm not very good at looking or there isn't very much available of that quality.
For more from NAREIT's REIT Week, be sure to visit NAREIT's website, REIT.com.